to me about volatility and actually
Yes.
how much of a nightmare or how much of an opportunity that is for your bank.
Well, it's a bit of both, and it's been interesting to see how the stock has come off, well, about 20% over the last 10 to 15 days, in an environment when actually banks can usually do reasonably well with interest rates coming up. We've had 12 years of interest rate down, which is actually very difficult on a trading bank or commercial bank. And finally having them come up, and the bank stocks have come off. But it just shows people are worried about what's happening with the economy.
But people are worried about what? So are they worried about inflation? Are they starting to price in a recession? Or actually they just don't see a way out of this?
Well, look, it appears that every country has got a difficulty with inflation, and be that short-term or long-term inflation, it's certainly coming through. We haven't seen it for 30 years. But the other side of that, each country is quite different in how it needs to handle it. For example, the Australian economy is very strong. Yet it appears that the UK economy is a lot weaker. Therefore, how do you deal with interest rate rises? So an interest rate rise in the Australian marketplace may be easier to absorb than actually in the UK, where if you push it too hard, you'll stop the economy.
But even in Australia, do you worry about your mortgage book? So the economy can be, strong enough to sustain it, but maybe some of your customers are not.
Well, look, our customers in the general sense are in pretty good shape. Now, there'll always be, when you get into different groupings, there'll be some that will have some difficulty, and we need to work with them to get them through these shocks. But have a buffer on what we actually think they can pay anyway when we do their assessment. And because the economy's been so good for so long, and interest rates have been dropping, many of our customers, we haven't reduced down their interest payments that they've been making. Therefore, they've got quite a buffer in there. So we think they're in pretty good shape, but there will be some that will have difficulty.
So at the moment, you're not seeing any strains on borrowing, for example. Is it? I mean, in terms of timeline, if there were, some concerns, when would you see it?
Well, I think you'd see it probably in 12 to 18 months, because a lot of the customers are still sitting on a standard variable rate. Yes, the rates have gone up. We've got a number that have gone in the last couple of years onto a fixed rate, and probably you've only seen about 3 months of those group coming through and going on to a higher rate. So that will take some time to come through. And the same in our New Zealand business, which is a fixed rate market.
Right.
The shocks will be felt there first, because you're going from 2% to 4.5% when you come off. At the moment, we're not seeing any impact from our customers having real difficulty. So there's still good resilience in the marketplace. They've still got jobs. 3.9% unemployment, 3.2 in New Zealand, I think it is.
Not bad.
We've got a job, and if you've got a job, chances of payment are pretty good.
Russ, of course, the relationship between Australia and China is extremely strong. What does, the COVID zero policy and the fact that we think it's here to stay mean for natural resources and therefore the Australian economy?
Yeah, I'm not an economist on what the impact will be, but it's just
for the bank.
For the bank. Just it's one of other things that we're having to deal with, be it interest rates going up, be it inflation being higher and all the input prices being higher, and then a slight slowing down of China, which does over time impact Australia because it's a big trading partner of ours. But at this stage, we're not seeing major implications, but over time, it will have an impact on Australia.
Yeah, given all of this market dislocation, given all of the volatility, what do you worry about the most for the bank?
Well, right now, the biggest worry I have for the bank, but for Australia, is labour. Despite all that we're talking about, we've got one of the lowest unemployment rates that we've ever had. Every employer I talk to cannot find labour to grow their businesses. It's just amazing. Infrastructure programs in Australia are very strong. I came through Northern Territory on my way up here, talking to the Northern Territory government. The projects that are going on in those areas, they need labour. And so that would be the biggest one at the moment.
But I mean, this is a huge problem because there's a mismatch in how much time, when they need labor, and I guess how much time to train them. So why is there this mismatch, which we're seeing almost across the world?
Well, we're seeing it across the world. And there must be a big group of people who have stepped back from the workforce. Australia has seen it.
COVID related, you think?
Yeah, but COVID related, and then after COVID, reassessing what they really want to do with life. Maybe they've retired slightly earlier and not been in the workforce for the next couple of years. Maybe they've taken a step back on some of the jobs that they were doing and saying, I'm not going to do as much. Thank you, I'm feeling okay. There's a lot of money in the system, so they're feeling all right about it. But in the Australian situation, we lost a big number of our overseas students which participated in the workforce. We haven't seen immigration for the last 2 years. We saw net loss of migrants last year in Australia for the first time, I think it's 40 years.
Wow.
So this is quite big for the Australian economy. So getting it going from a labour perspective is probably, in my mind, one of the biggest things to keep the economy moving.
I mean, reassessing your life is never a good idea. We'd probably be, I don't know, with
You'd come on down to Australia.
Or in South Park or something like that. Yeah. Ross, talk to me a little bit about, so you have a unit in France.
Yes.
What does that mean for the UK? Is the financial sector moving more to mainland Europe?
Well, we've got a lot of customers that actually operate out of Europe, and because of the UK coming out through Brexit, we have to service those customers, and our operation in France will do that. Of our top 100 or largest customers, 33 of them have businesses in Europe.
Okay.
So there's a very strong connectivity between Australia and Europe, as there is between Australia and the UK. So we've just set up a new office. I was over there yesterday opening it. We've got a really good team set there and met a lot of the customers that we will do business with through Europe.
But so the unit in France is what, because of Brexit, so that you need two bases, or how would you explain it?
We've got two bases. There are some things that we can do out of the London office that we've been allowed to do from a regulatory perspective, but the core of our European business and the specialist people and the risk takers need to be in the European market, and we've based them in Paris.
How do you see London changing because of that as a financial centre?
Well, it's one of the things for London. I think it just needs to find itself getting out into the marketplace again. I think the UK just needs to get its confidence back to get back out into international markets and do business again. And sort of, you've made the decision to come out of Europe, so get back into the markets as quickly as you can and rebuild the confidence, the trade, and then the banking sector will be fine.
But easier said than done. Is that through incentives?
Well, I think a bit of energy towards it might help, rather than constantly, squabbling over what the issues are here. Let's get out and get the UK back trading again. I know the trade missions are out there, but I think that will be very helpful for business as well.